welcome to economictimes.com. I'm your host Pallavi. As part of our India Investor Forum 2021, we have a special guest for a freewheeling chat, Mr. Gaurav Dua, SVP Head Capital Market Strategy, Sharekhan. Welcome to ET.com.
Hi, Pallavi. Thanks a lot for calling me.
So, in this conversation, we'll be talking a lot about how the research goes, what investors should do, some case studies also, and also what is your outlook for the market in the coming times. But before that, let me give a glimpse of your background to our viewers. Mr. Gaurav Dua comes with over 20 years of experience, including 17 years in equity research and fund management. He's worked in diverse industries ranging from manufacturing to media and finally to doing some equity research in various broking companies. Gaurav joined Sharekhan in November 2005 as a senior research analyst with the responsibility of tracking information technology services and telecommunications sectors. Within the first 6 months, his role was enhanced with additional responsibility of guiding the work of the other members of the research team. Since January 2008, he heads the fundamental equity research team and is also actively involved in supporting and managing long-only portfolio management schemes of Sharekhan. He holds a Bachelor of Engineering degree and MMS in Finance. So let me move on with the questions. My first question to you, Mr. Dua, is how important is research before making a long-term investment, especially when it comes to equity markets?
Pallavi, the short-term moves that we see every day, they are driven more by the, flow of funds, sentiments, short-term events. But at the end of the day, the stock price movement are driven by the fundamentals of the stock. Fundamentals by that I mean both qualitative and quantitative study of a stock. One needs to understand and see how the stock is doing, business is doing, what are the growth prospects of this company. Will the company generate enough free this in cash flows for the investors? Is the company efficient enough? Does it have healthy ROE, ROCE? So these are some of the quantitative aspects that one needs to look and understand, and then look at what value is that stock available at. And over top of this, one also needs to understand and look at some of the qualitative aspects like the quality of the company's governance standards, management, transparency levels, disclosures. So all this is a holistic study of a business, of a stock, and based on that, if you invest, that is when you make money. That is when you understand how to invest for the long term.
Right, right. Through the India Investor Forum, we are trying to address key problem areas of investors and also trying to provide them some solutions. So I would like to know from you, how can retail investors benefit from the experience of brokerage houses, and what are the added advantages which full service broking offers comparison to do-it-yourself discount brokers?
So, broker like us has been there for more than 2.5 decades. We have spent and invested a lot into knowledge-based services, equity research, both on the fundamental side, quantitative side. And with this kind of an experience, what we bring on the table is the expertise and the skill set to make the right calls in the market, to make the right investment decisions. We have our research team covers more than 240 stocks, which takes care of around 78% of the MCAP of the market. So you have a very broad view of various stock sectors available in the market. And apart from this, a full service broker also offers a lot of additional products, services, like we offer a host of investment portfolio products, both on the advisory side as well as on the portfolio this management services side. We offer stuff like margin funding, IPO funding, loan against shares. So all this is a whole gamut of products services available to the investors which are not available with low cost brokers. So there is a lot of value that a full service broker will bring on the table for investors.
Right. Could you also tell us in detail about, Sharekhan's 3R fundamental research and what are the philosophies behind this?
So we have built this, proprietary research framework,
Mhm.
which stands for 3R stands for the right sector, the right business, and the right value. So our approach to analysis research is that we take a top-down view. What we feel and this belief is if you are in the right space, you will always make money. So it starts with the sector outlook. How is the sector likely to do in the next few years? And based on that, then we go and shortlist the right stocks within those sectors. And obviously, the stock has to be available at the right price. So, for an example, if you invest in best of the stock company business at the wrong time, you can end up actually losing money. The case in point is no, Maruti. In June 2018, the stock was available at 10,500. It's a very good company, multinational, cash flow, cash rich. It's the market leader. But still, when the auto cycle turned from June 2018 to somewhere in November 2018, within a period of 4 5 months, the stock went down by 35%, 40%. So you have to have a top-down view. You need to understand what are the growth prospects of the space sector that you're investing in. And that is how we do our 3R 3R
Research.
research.
Mhm.
We also look at bottom-up picks, but that is more to do with the small cap stock, and that is where we believe that the stock picking or the bottom-up picks actually works well.
Okay. In fact, since we're talking about, how research is important and what impact it can have on the portfolio, also, can you share a real story where investors made more returns after, changing their investment strategies, maybe after associating with full service broking like Sharekhan?
So, as I said, we believe, portfolio building is a science, and in portfolio building, it is not about stock picking. As I said, we take a top-down view. So
Hmm.
it starts with, sector allocation, and that is where we believe that we have strength. Our decades of experience is actually extremely useful.
Hmm.
So for a lot of clients, for example, in somewhere in 2015, 16, we a lot of investors had a very skewed kind of investment towards healthcare sector, pharmaceutical sector, because the stocks were doing extremely well. However, our study showed that there is extreme pricing pressure in the pharmaceutical space, especially in the this thing US markets, and that is where we had asked a lot of our clients to reduce that exposure. And some of them did that, followed us, and they were extremely happy. And if you see, even after 5 6 years, some of these generic formulation companies haven't come back to their all time peak this price levels.
Hmm.
So, catching these sector trends, helping the clients make the this thing right allocation, either to reduce the exposure to certain space sector and increase exposure to the certain space, is an extremely value add that we bring on the table, and that has helped the clients not only gain or get returns better than the benchmark, but also to have a less volatile portfolio.
Right. In fact, if you talk of the current market scenario, there's a general tendency among investors. Everyone wants to be part of the, the bull market, but there's a slight bit of correction and there's a lot of panic. So, in your opinion, what should be the right approach for retail investors looking at the current scenario?
Uh, so, we believe that India is on a cusp of a multi-year upcycle, both in terms of economy as well as in terms of growth in the corporate profits. So, when you keep this big picture in mind, you should be looking at these 5 to 8% fall in the stock market as an opportunity to buy rather than get bothered about that. So, we are extremely clear on that. And if you see for last 1.5 year, we have got such opportunities. In fact, we got in this year at the start of the year, then we got somewhere in this April, May, and those who were able to use these opportunities have actually made money, and those who got disturbed by these opportunities, sold off, got out of the markets, have actually lost the opportunity. So if you keep this bigger picture in mind that for next 2 to 4 years, India and Indian stock markets are going to do well, you will actually be looking at these opportunities to invest. And we have also done a study which shows that normally after these kind of falls, pullback, the equity markets tend to bounce back also extremely sharply.
Mhm.
And as an investor, you are not able to say time it. So if in last 18 years, right from 1990 to 2018, we did the study, had you missed 20 best days of that rally, your equity market returns would have actually become half or less.
Mhm.
So the idea is, if you know that the economy is going to do well, the corporate profits will do well, so accordingly stock markets will do well, you need to stay invested. Having said this, we also this believe that mid cap and especially the small cap space is ripe for a much bigger fall,
Mhm.
uh, correction. And if you see past 2 decades, over 5 to 6 times you had a one-way kind of a rally in small cap stocks, and these rallies haven't lasted for more than 18 months ever. And we have had that kind of a rise. And even in a multi-year kind of a rally in last decade from 2002 to 2008, we have seen twice, in one in 2004 and then in 2006, that the small cap index actually fell by 18-20% plus, and the individual stocks went down by 30, 40, 50% also. So that's the space where you need to be very, very careful. That's the space where you need to reduce your exposure and move out of these speculative stocks, momentum stocks. That
Mhm.
is where I believe that most of the small investors get hurt.
Right. In fact, there are different factors that determine the market sentiment. How do you see at the sentiment right now? What is your outlook on the markets? And you mentioned where the investors need to be cautious, but also if you could highlight any sectors which you are very bullish about, where investors can look for opportunities.
Correct. So we believe that, with whatever is happening in Europe, we are already starting seeing the third wave, and
Mhm.
also in US, where there's going to be a gradual withdrawal of this quantitative easing, and down the line next year, somewhere in the second half, you would start having this interest rate hikes. Given all that, the volatility in the stock market could go on for in this near term, probably some weeks. However, we believe that by the end of next month, the durable bottom will be in place, and you will start seeing a new upside. So that is our view on these markets. Having said this, a lot of new investors who've entered the market. Their experience for past 1.5 year, 2 years have been great. they need to understand that that kind of a rally is not going to repeat again. They need to this readjust their expectations. You
Mhm.
will have a very decent gains over next 2 to 4 years, a healthy, probably a double uh, digit kind of gains, but not the kind of gains that we have seen in last year or so.
Mhm.
So that's where. And then, as I said, we have very high faith and conviction in the fact that the Indian economy is going to do well for next few years.
Mhm.
And based on that, we believe that the portfolio allocations have to be done accordingly.
Okay.
So basically, the property cycle has started looking up. The capex cycle is also showing early signs of improvement. So we would like investors to have exposure to this building material, real estate stock, corporate sector banks,
Mhm.
and basically housing finance companies, consumer stocks, and also specific industrial stocks.
Those were some great tips. But before we let you go, what is your word of caution for first time investors, those who want to join the financial markets at this point?
Yeah, the word I just said, the new investors need to understand that what you have seen for past 1.5 year is not something which is going to repeat.
Mhm.
The last 1 year was a phase where it was easy to make money. A lot of these new investors have taken very high risk, and they have made a lot of the money. Now they need to be extremely careful. They
Mhm.
need to reduce exposure to the small cap space. They need to use the money what they have made to buy into quality large cap and quality mid cap stocks, make a core 2 to 3 year view kind of a holding portfolio. So that's for them. And also now the time is come that you do your homework. And if you don't have time to do it, or you need to take advice from an investor, someone like us who have decades of experience in terms of equity research, in terms of advising clients.
So it's a great time for investors to start making the right investment decision, and Sharekhan can be your perfect partner for guiding you, and you can you make use of their experience. Thanks a lot, Mr. Dua, for this wonderful conversation. It was great to have you here.
Thank you so much, Pallavi.
Thank you so much.
Thank you.
This is Gaurav Dua, SVP Head Capital Market Strategy, Sharekhan. Stay tuned for more on India Investor Forum 2021. Thanks for watching.